Hey guys, how are you? Wonderful Monday to all. Please give me some okay that you can hear me, that you can see my screen. Perfecto, thank you very much. So how was your weekend, guys? Congratulations to Spain for winning the Mundo Basket. Big disappointments from other national teams like the US, like Serbia. Yeah. Oh yeah, Danny, it's getting very cold. Too early. The life of Canada. The life of Canada. I'm still getting used to that. I'm still getting used to that. Good. So, guys, I hope you enjoyed your weekend and you're ready to battle this another wonderful week. Keep in mind, this is the FOMC week, cash rate decision, the expectations from the Fed versus the numbers that do not really support the rates cut. What will the Fed do? What will the Fed say would very likely affect the future run of the markets? And until then, likely to assume that the market would continue and mainly zigzag, providing some opportunities, but nothing dramatic and not defining longer term runs. And this is the main, maybe the feeling currently. It's you can easily feel on the market that there is a disagreement or some kind of dissonance or the lack of synchronization between the higher time frames to the lower ones, right? We always are looking to trade the conditions where we have the synchronization between the bigger trends and to the lower trends that they provide us the opportunities to ride. Currently, many instruments, of course not all, but many instruments have this lack of synchronization. So it's important to see what to do in such case, what not to do, and where it's simply best to say, leaving it alone, waiting for the better opportunities. So very, very important in such conditions. And mainly don't forget Wednesday, very important day. So let's begin then for all those of you who are watching us for the first time. The very first thing I would like to say, welcome to our family. I hope you find this place as good as you expect. We always try to deliver the best value for our followers, to provide the best trading opportunities and the best possible setups to trade. So two things I would like to ask from you. First of all, inside the members area, make sure you watch the video tour so you understand how to use all these beautiful members area in your favor and each of every single ones of them. Make sure you watch this and your comfortable pace and time, the most recommended webinars. You can also find them inside the trading report. This trading report you get right after the live trading rooms. It takes time to create them, so sometimes it's not immediately right after the live room. So make sure inside the report you watch the video of how to use that properly. On the lower part you would find this list of webinars to watch in order to understand the terms we are using. The watch list, which simply allows you to click and get the idea what we are looking for. Okay, and of course it's separated by time frames, instruments, and markets. Below in the comments, brief explanation about each time frame. What do you have there? What are the technical terms we refer to here? Okay, and that's all. Just keep in mind the report is a summary to the live trading room. It's not a replacement, it's a summary. In the live trading room we discuss about all the things as they develop, okay, and what's the right thing to do. Report is there to remind you and help you. So let's begin. As always, we would be going over the trades we have running. Trades that we follow. Some of the instruments are irrelevant currently anymore. We will have to go and update it, and we'll discuss about new opportunities and new instruments that we have to follow. So let's begin with the European pairs. We had 3 pairs that we have been working with. That's the Euro franc, where our goal was buy retraces. As you can see, the Euro franc provided us the structure of higher highs, higher lows, provided the it's clear, of course, on the 1-hour chart, providing the retrace down, cleaning several areas here, and holding after the news from Draghi. Draghi going all in, announcing more quantitative easings, more money involved, negative rates, and so on and so on. He's going seriously. Maybe he has no choice, but the actions are there, and they plan to be. So the question is, how does that affect on the Euro franc right now? As per the cycles, the weekly divergence and the double cycle is still in play. On a daily, the last divergence that was in play for us was bullish, which right now starts slow down. How does that slow down? Remember the very, very simple logic. After a completed cycle, we can be exposed to corrective cycle. We should be exposed to corrective cycle. Corrective cycle could be built into structures, 2 waves, ideal, or a range. Not ideal, sometimes annoying, but part of a technical family, the technical tools, the technical possibilities. Now, will that change any of the plan here? The answer is no. We still expect a corrective cycle take place. The waves or a range. So the plan is still buy retraces. Even if it is a range, a real range is one that has 5 spots inside and has cycles inside, right? Meaning this leg should be cycled, this leg should be cycled, each of these legs should be cycled by itself until it creates 5 spots or more. Now, what do we currently have on the 4-hour chart? We got the first leg from the daily broken into a cycle, and the second leg is still not. So we are blocked here with the bearish divergence, while the daily suggests still a corrective cycle, and the weekly hints a buy, right? And this is one of these disagreements I was talking about at the beginning. So what does that mean? The view is still bullish. Buys is still the correct thing to do, at least as long as we are holding the low, possibly even this range. How can we work with that buys? 2 waves with a bullish divergence, bullish hidden divergence, or yes, at the bottom of the range. As simple as that, assuming this is going to be cycled by itself. Do we have these conditions right now? No, we don't. Right? So should we trade the lower time frames right now, as we've been doing all the previous week in this beautiful building structure? The answer is no. And that's one of the ways the market is telling us always be careful, because before main events, like we expect this week, the market is normally, technically, coming to this place where it's complete 50-50. If it moves down now, no one will be surprised. There is a bearish divergence. Daily is possibly a range. Why not? If it's blocking here and moves up, no one will be surprised because it could be a possible range or some small two waves and continuation higher. Right? This place of lack of synchronization is a classical say from the market. Be careful. The picture is not as clean as it was a week ago. And when it's not clean, should you bother yourself, waste your time, put some effort, right? Focus on the chart, watch the chart for nothing? The answer is no. So the Euro franc expectations are still for the buys, but not with the 4-hour chart setups, not with the 1-hour chart setups, as we've been working with right here. Just want to remind you on the very beginning. Sorry, here with the bullish hidden divergence, not here, right? But the view now is only for the longer cycle. And once we get the two waves or bottom of the range to be cycled by itself, or a 4-hour chart range to hold, and it could be any of these, we can never predict anything like that. That's why I always remind you, we never predict, we never trade wishes, expectations, beliefs, or anything like that. We trade facts. And the fact is there is nothing currently happening on the 4-hour chart. So the short-term trading we have been involved with currently is irrelevant anymore. It paid what it paid. Now it's time to wait for the next things to happen. So the longer view for the Euro franc is bullish, yes. Setups need to wait. Will that take a day or 2 or 3 or 7 to develop? Who knows? The fact is we're currently in disagreement here between the long term and the short term. It's time to let the short term recreate itself. So that's for the Euro franc. The next one was the Euro versus the Yen. Quick reminder, the two waves that we were trading here were two false breakouts. Both were in the alternative trend line spots with the divergence and false breakout, and the bigger one was a bullish divergence. Then we built a bullish convergence, and the idea of ours was buy the retraces. So from this area we are bullish. What's next for this pair, which also delivered nicely? According to the weekly, you can still expect it to push further. Right? If we measure the cycle, we can expect it to push further to the upside, corrective cycle, right? Based on the daily. According to the daily itself, you can break it this way. It has to deliver a corrective cycle. Let's put the Fibonacci's. Corrective cycle could be what? Two waves or a range. Can we predict which of them is going to be? Never. Right? But these are the two ways that it can structure. Did we have two waves already on the daily chart? No. Do we have a range on the daily chart? Again, not yet. So both scenarios could completely easily develop. The plan is buy retraces. What do we have on the 4-hour chart? If the daily is building up a first leg, then the 4-hour has to be cycled by itself, right? 4-hour was building up a beautiful movement here for us, and even provided two waves retrace. The way it looks right now, it's getting ready for the further continuation. How will that be developing? Exactly like the Euro franc, two waves or bullish hidden divergence or a range by itself. Can we predict how it will be developing? No. That's why on the 4-hour chart, we have to wait. Likely to assume that after the FOMC, the picture would get clearer. Until then, is there a reason to trade the 4-hour chart? As you can see, the answer is no. The daily chart by itself creates a bearish hidden divergence. The 4-hour chart creates a bearish divergence, basic type, and that means simply disagreement or lack of synchronization between the 4-hour, daily, and the weekly. That means the short term is currently neutral, and all those of you who were riding the buys, remember the clearances zones we discussed about here and here? These areas were clean, the 120 psychological was taken. There is divergence against you. Enjoy the profits. And now, do not rush into a decision. Jump in could be the easiest thing to do, but it would be wrong. It would be completely based on luck, not on facts. Right? Buy now is a belief. I believe it could do this or that. There is no fact. There is no bullish divergence in play. There are no two waves to the downside correction. There is no range as a correction. Therefore, neutral on the lower time frame is the right thing to do right now. And according to the expectations, as explained before, we still are after the corrective cycle on the daily to develop. We just need the lower time frame to rebuild itself. So that's for the euro-yen paid previous week rallies. Now neutral on the lower time frame, still after buys for the longer time frame. That's the bottom line. And the euro versus the Kiwi. This is our star of the week from previous week. So what do we have on this pair? Basically, we wanted to see that approaching towards this clearance area in this push, or actually this push, building up the two waves correction and the false breakout on a psychological level of 170. The way we wanted to see that making it was this. So we got it completed, and then it becomes bullish with clearing the stop losses of who? Of all those that sell, or all those who buy early. Those who buy here and protect the last low, because that's what always is teaching, right? Everywhere, all the basics teach that. Massive support area, protect below, blah blah blah, psychological, all that. So that's the stop losses of the retail traders' orders, unfortunately, but this is how it works. So what's next with this pair? We got a breakout of the dropping trend line in this correction, and we are creating the higher highs. So what does that give us, the traders, as for now? To answer this question, let's go back to the original view. The original view comes from here. This is a triple double structure, 3 higher highs, 3 higher lows with 2 waves retracing, finished with a bullish divergence, break of this trend line, and we are building up the next possible trend. In simple words, as long as this trend line holds, our expectations for the longer view are bullish. Now, as long as these expectations would remain relevant, we want to have the higher time frame support this view, and the higher time frame definitely supports this view by providing us a triple descending cycle and a long-term destination as to the 50% retrace. So long story short, there are all the reasons on earth for a long-term buys here. Will this buy start from here, or will the dance around and then rally? Or will that make two waves and then rally? Can we ever know anything like that in advance? Of course not. That's why we trade facts. As per the fact right now, the last divergence from the daily is bullish hidden, taking us back to the weekly cycle developing, the 4-hour chart making this a convergence after the false breakout and a trend line breakout. This is the false breakout I refer to. All that happens after the clearance zone. And the 1-hour chart, assuming this is the first leg, it has to be a cycle, or at least a structure of higher highs, higher lows. And the 1-hour chart provides this movement. Classical, of course not. It has all the ugly structure you can imagine, right? But technically, we have a full synchronization between the weekly, daily, and the 4-hour chart right now. And that means as long as this low holds, the plan is buy retraces. Will we get any beautiful setup according to the strategy you use on the lower time frame? Trendline breakouts, false breakouts, moving average crosses, ABCD, triangles, whatever it is, whatever your strategy for the harmonics, right, Danny? I'm giving you the respect. Dragons. Will we get any classical patterns inside or setups inside this directional structure from the higher time frame? We don't know. We can't know. But it's correct, and as long as this low holds, we are bullish. One thing to pay attention to, we always want to avoid randomness. This is one shot. If we get the same one shot crossing below 61.8 Fibonacci of this movement, one shot, this is automatically a removal from the watch list. Why? 61.8 is using us as the lowest Fibonacci, acceptable Fibonacci level in a developing trending structure. When we have the higher highs, higher lows, it's a trending structure. In real trending conditions, we should not get one shot below 61.8. It's okay if we have corrective cycle like two waves below 61.8. That's not problem. But one shot below, it's normally a sign from the market that you have to be careful. The flow of the money, as expected here from the buys, seems weak. Okay, that's why 61.8 is very important level to pay attention to if we shoot one move down. Pay attention. So Euro Kiwi, beautiful synchronization, looks good to trade for the buys. That's from the Europeans. Now the question is, what's next with the other pairs? So there are a few that I follow, new ones. One of them, sorry, is the euro versus the pound. While the daily is building here a structure of lower lows, lower highs, and approaching some clearance zones and the 200 moving average, right? It's also building up some slowdown with a divergence. And the 4-hour chart builds a divergence by itself. So now it's watching to see for the reversal signs like false breakout and higher highs. If and when we get them, we can discuss about the buys. Meanwhile, basically the sell goes on, of course, for all those of you who are involved. But personally, right now, the level is not really inviting. We are in full duplication with a potential bullish divergence, right? Next to pretty strong supportive area, clearance zone. Wouldn't rush into new sells unless you are already involved. Well, this is on the list We'll see how it goes, how it develops during the week, and decide accordingly. Meanwhile, the three pairs of the euros I find interesting. That's the euro yen, euro kiwi, euro franc, while the euro yen and the euro franc are only for the longer run currently in the hold, waiting for new opportunities there, and the euro kiwi is the one that came into agreement again. Next ones would be the pound pairs, the ones that paid amazingly previous week. Let's go. So we had a couple of them. Today we have a new one. This is the pound versus the kiwi, and I will talk about it in a second. No, how do I reduce my chat here? Just 1 second, guys. Yeah, so sensitive here. Okay, so the pound dollar, our first one, we are bullish in this pair from the daily cycle, expecting the two waves. Ideal area around the 125-ish. Now let's take a look, where do we stand with that? So what do we have here? Special cycle. With a bullish divergence. Expecting it to reach in between 38 to 50. Normal targets for special cycles, right? So plot the Fibonacci retraces. 38.2 is reached, and that's the 125 I mentioned before. The 4-hour chart provided us the first leg. As you remember, if this is the first leg, it has to be a trending structure on the 1-hour chart, right? We got it in terms of higher highs, higher lows. And the best part, we got it into corrective two waves. The breakout happened. It took some time to gain the momentum, but we had it. And the risk reward was very nice accordingly. 125 is reached. What's next? Exactly like with the euro yen and the euro franc. Look what starts to build up with this pair. We should be exposed to corrective cycle, right? If this is a special cycle, we should get 1, 2, or a range. How will that be developed? Can we predict? No, we can't. The only thing we do know is we want to reach the 38 up to 50. 38.2 is reached already. So what's next with this pair? Will it reach the 50? Maybe more. Will it not? Right? Let's take a look on the structures currently. This is the structure currently, and this is called a bearish divergence. Should we sell? No. Against daily cycle doesn't make sense to sell. Should we buy before the 4-hour chart give us the structure once again to the buys and synchronized in the daily cycle? The answer is no. So what do we do in that case? The best thing to do right now is go neutral. As simple as that. And for all those who still want to trade to the upside, no problem. Let the 4-hour chart rebuild itself. Two waves or a bullish hidden divergence anyway. Or make some structure by itself. Ranging structure, right? But let it create it for you. To guess where it will hit doesn't make sense. Okay? So it's very, very, very important to pay attention to these things. And at the moment when you get lack of synchronizations between the lower time frame to the higher time frame, it's not a moment to abandon the cycle from the longer time frame. It's just a moment to say, oh, okay, if I'm involved, I'm taking the money. If I'm not involved, I'm waiting where the lower time frame would synchronize inside the cycle I expect. And according to the daily, we still expect a corrective cycle. That's the bottom line. If the 4-hour chart would fit it perfectly, then look for the next buys once again. Okay, so as per the daily, the expectations are still buy retraces. As per the 4-hour, there is currently nothing to do because the 4-hour chart is the one that currently has the signs against. Okay, so retraces, let it rebuild, let it form the structure, and then the buys. Invalidation for the bullish view would be the 61.8. If we shoot one leg through these levels, this is an immediately removal, neutral and removal. Why? Due to the same idea just as described before. We don't want, in assuming trending conditions, you don't want to be exposed to one shot below the lowest Fibonacci, acceptable Fibonacci level. Okay. The next one, pound franc. So here we are in this. First of all, we can of course break this one into a cycle, like triple ascending, or even can play here with that. The idea would be the same. According to the triple cycle there, we are into 50% possibly to be taken. Right? Note, let's take a look on a daily rally. As you can see, the daily still did not form any divergence as per ending divergence, meaning it's still under bullish pressure. If we take a look on the expansion legs, you can figure out that the 161.8 expansion in these two waves correction is taking us towards the same 50% we expect on a triple cycle. There is also massive clearance area here. There is a good opportunity we are running towards that. And as long as this trend line holds, basically we are under bullish pressure. Why this trend line is so important? Because this is the ABCD structure. If we break suddenly below it, that means that this cycle is forming a triple, double possible trend continuation. As long as it didn't happen, and as long as this rally does not have false breakouts and lower lows, there is no reason to get out fully. Previous week, with the appearance of this divergence, we discussed about the partial divergence. Due to the same reasons, right? Daily, possible structure of triple double. 4-hour, each of the legs is a cycle by itself. That's a great place for a cash out, partial. Should we cash full? No, because the daily still has the room here, the magnet zone, right? And this structure remains on for the beginning of this week as well. The possibilities are still towards this magnet area. This is the direction currently yet of the pound franc. Expecting that slowly push higher. Next one on the list is a new one for the pounds this week. That's the pound versus the kiwi. What do we have for this pair? So first of all, for the very long term, that's one of the situations I call boy, oh boy, that looks good for a long term. Problem is, those of us who do not have Islamic accounts where we don't pay swaps, it's a bad idea. Holding a pound kiwi for a very long term, paying the swap every single night could cause that by the end of this rally, there will be no profit left because everything would be raised with the swap. So do we really want to waste our time on that? Nah, course not. So the long term is bullish. The structure that we see on the weekly fits in perfectly. Triple double with a bullish divergence. The ideal scenario would be once this one would be cleared, because that's where real fun for the long term should begin. However, on the shorter view, everything looks positive as well. We are rallying in this daily structure. Of course, we can even break it into something like that, trending structure. The daily divergence is yet creating, nothing yet finished. It's only potential. We have no idea will that be a new high or will that be a divergence. It's only potential. And the question is now the level. So if we take a look on this level, the 161.8, oops, sorry, bad measurement. The 161.8 is around the 198. If we measure the bigger cycle, possibly even further, if we measure only the last leg, then the full duplication is again 198. So no divergence completed on the daily, no divergence completed on the 4 hour, right? And the weekly is bullish. That brings in this structure, the lower time frame structure, triple double, right? The daily cycle as it's building up into play. We got the breakout by the end of previous week, and this pair is back to bullish. And as long as the rising trend line holds, the idea here is expecting new highs towards 198, maybe even all the way higher. The way I see that, this is the weekly trend line I mentioned before. I believe this area should be clean. Then likely we're going to build some retraces for a very massive longer term continuation. Not going to predict so long. Let's try the facts. The facts are currently bullish, and my expectations are for the pound versus the kiwi to reach the 188 or maybe higher, or as long as we don't have reversal signs. What are the reversal signs, guys? As you know, false breakouts and lower lows, or at least 3 lower highs, lower lows for a possible trend change. We don't have that. It's all good in the wood. The expectations are yet bullish. Questions so far about anything explained? If there are any, please, about anything explained, nothing else, okay? Then please ask. Meanwhile, I'll prepare the next ones. That will be the Australians. And we had 3 of them. Let's start with the Aussie Kiwi. So our long-term Aussie Kiwi was and remains bullish. We are in this cycle. Completely legible for 2 waves still. Completely good with a range still. This or other way around. Every visit on the bottom, we are after the buys. For all those of you who are with us for the long term, you know how long we've been waiting and hunting for this pair, right? Couple of months ago. Waited until boom. Now that's what we call a boom, because when that happens, when asynchronization fits in the longer view and the shorter view, normally the result is super sweet. So we had a rally. Then we were blocked here with a double cycle on the daily, confirmed with the 4-hour. And the expectations back then, right here, was for 2 waves, and then again ideal structure, continuation, or a range. Why a range? Because range is one of the acceptable corrective structures. And we got the 5 spots inside the range, and we got a breakout. The breakout gains the momentum by increasing the volumes. The range is cleaned for good, and that means the trend is back to bullish. And that means our long-term destination was and remains to the top of the range. Daily, no divergence. 4-hour, no new divergence. No false breakouts. No lower lows. No 3 waves. 3 lower highs, 3 lower lows. OZ versus the Kiwi was and remains bullish yet. Will that be able to shoot all the way towards the 111, 112? Doubtful. I do expect some fight, not too far, somewhere in between 108.50 to 109 here, this area. This is how I believe it's going to develop. Okay? ZIA dollar yen, patience, wait for it. We have to go in the order. So OZ Kiwi, guys, the plan was and remains buy the corrections. In that case, we did not manage to get 2 waves, but we did manage to get the range and a breakout. The buys goes on, the expectations are further. Next one, OZ versus the franc. We are trading this triple cycle from the weekly. We can start from here. We can start, if this is a range, no problem. We can start from here. Many ways to build it up. The bottom line, the bullish divergence is in play. Pardon. The daily fits in this structure by making a cycle like this, false breakout in play. We also faced an extreme divergence here, and the expectations are accordingly. If the daily is making the first leg, the 4-hour has to be cycled by itself. The 4-hour gave us this cycle right on the clearance zone. Bollinger Bands riding 20 candles right, as you can see here, right? 20 candles on the very top of the Bollingers. We expect a correction toward the lower part of the Bollingers. Reached. Back to the trend line, reached. Back to the supportive area, reached. What's next? The correction is expected to be 2 waves or a range. We have 2 waves, bullish divergence. We have a range. So what's next? The view is bullish, and I expect it to continue higher. Will that be able to provide us deeper 2 waves before it breaks the range and then rally? Or will that simply, like the Aussie Kiwi, break here and continue straight? Can we know anything like that in advance? Of course not. But the view here was and remains bullish. Drops, buys, expecting the continuation further. What do we protect? 61.8. Why? If we suddenly get one shot below 61.8 in trending conditions, it's a very big warning sign from the market. Okay, very, very important. Cristobal, Frank, yes, it is. It's a bearish hidden divergence on a daily chart against the weekly cycle. That means the 4 hour to be corrected. That's why I showed 4 hour formed one leg from the daily, cycled by itself on the 4 hour, and the corrective cycle. And it formed both two waves, by drawing, and a range. So will that make it deeper, or will just hold here? Can we know in advance? I still don't know the techniques that will help me to predict how the market will think. Maybe one day, who knows, right? But the fact is the corrective cycle came in play. Cool. And the Aussie dollar was our last one from the Australians. The idea here is dips and buys. We still don't have real dips after the small ones, right? We got little pullbacks on the go, and right now we don't have anything clearer. So there is simply nothing to do currently on the Aussie dollar, and the view here is still the same like the Aussie franc and the Aussie Kiwi, retraces and buys. Will the retraces be deeper, or will that simply be some small consolidation here? No clue. Can't predict. But the pressure was and remains bullish. That's from the Australians. Last one from the Pacifics would be the New Zealandian CAD, the one that we were trading to the upside. We got the beautiful structure of three higher highs, three lower highs. We got the two waves, and we got the next round. The second leg was small. By ideal, it would be creating by itself a cycle, but it didn't. And instead, it's completing here this structure and turning it into bearish. This is the moment where the weekly and a daily and a 4 hour are in disagreement, and this is the place where it's simply time to go neutral. No new interesting opportunities derives currently in this structure on the New Zealandian CAD. Dollar pairs, we have a dollar yen. Zia, here we go. So what do we have on a dollar yen? Quick reminder, a cycle from the weekly. Of course, we can work with that. Bullish divergence on the small one and on the big one, as you want to draw. Daily in a full confirmation. Look at this beautiful slowdown there. Divergence, convergence. Expectations are for the daily to be two waves, fit in the weekly correction, or, as annoying as it could be, a range. This rather way the plan was and remains by retraces. On the short view, the dollar yen is this kind of structure, reached very important level 108. This area derives from the developing cycles. And the question is, what's next? So as just described, due to the cycles of the weekly, confirmed with, let's take levels here. If this is the bigger cycle, right, the 110 could be the final destination. Double cycle, final destination, 38.2. The daily should be in agreement because the daily should provide a range or two waves. And that means buy retraces is the plan. The short term provided us these 3 higher highs, 3 higher lows. The 1 hour chart got 2 false breakouts for us and lower lows by itself. So corrective cycle could be in play. How could the corrective cycle look like? No, why it's not drawing? Here. 2 waves, or, and you don't not the answer, a range. We got a false break on the top, we got a false break on the bottom. The continuation could be inside the range as well, like we saw on the Aussie Kiwi, for example. Can we predict which of them would develop? Of course not, right? So once this corrective cycle is over, the expectations for the dollar yen is to form the second leg to complete the correction of the weekly cycle. Okay? Buy dips was and remains the plan for the dollar yen. You're welcome. Next one. Now, this one starts to be super interesting. The only thing here is the current existence of the 4-hour chart, and I will explain. Dollar franc, beautiful in terms of swap, very positive. According to the long term, we can easily here see something beautiful to the upside. Right? There is a lot of room in the correction of the longer cycle. On the shorter view, there is kind of weird, but trending structure here. After that, we are in a massive range. Of course, we can say there was like a 2 waves retrace here, but the fact is we're in a range. Long story short, the pressure is bullish for the long term. Drops and buys is the correct thing to do. We got this structure as a triple double with a bullish divergence here. And the daily starts to fit in by itself. Higher highs, higher lows. This trend line was broken, looks good. The only problem is the 4-hour chart. We don't have any 2 waves for a buy. We don't even have yet any range we can work with in a buy. So the dollar franc starts to be on the watch list for a trade. I promise to update, of course, as we go. For long term, the conditions are ready for the buys. 61.8 of that would be the invalidation if we suddenly go below, but the plan here is for the long-term buys. Short-term, unfortunately, there is nothing yet currently in agreement. And the last one for the forex part is the CAD franc, which currently still moves in bearish structure of lower lows, lower highs. Last divergence from the daily is bearish hidden. 4-hour chart making the first push to the downside, and I expect the second one. And if the first push from the 4-hour chart, then the 1-hour chart has to be trending, and the 1-hour chart, well, we can break it like this. The 1 hour chart is trending by making lower lows, lower highs. Right now we are building up the two waves. Break below this trend line should be the beginning of development of the next leg. So cat franc, expecting the move down lower, and the structure currently is developing in two waves. Bearish hidden divergence is there for the possible bearish trend continuation. Break below the trend line should be the one that might open the doors for that to happen. That's from the Forex view. Now we have commodities, crypto and stocks. So first of all, indices, right? Let's go to the indices. DAX we had in our list. By break below the trend line, we should be looking for good bearish sign. Unfortunately, the structure is yet far away and it's getting even further and further. So right now, what happens is that we are back to the top. No, what's all this alert now? Right now, the tops of this possible range, false breakout, and we are on the top. So what's next here? Almost impossible right now to define. There are not enough facts based on the daily and the weekly cycle. This trend line was broken, invalidating. On the other side, we are still on the top of the range. Too many ifs. Therefore, as we did not get the break below the trend line, this one is removed to neutral. No indices are currently in play for us. Gold. Gold we are running beautifully in sell. What are we trading? A triple descending cycle from the daily, expecting two waves, or as you know, a range. This or other way around, sell the rallies was and remains the plan. Previous week we got the beautiful push to the downside, kind of structure of a trend, bearish hidden divergence, another push to the downside. So what could happen from here? First of all, straight continuation could start any moment. Second, we could simply develop two waves in deeper view. Third, it could simply be a range by itself in any sort of a structure. This or other way around, the pressure is yet bearish and the expectations are still to the downside. Keep in mind that the daily could have this as a range by itself, so the correction could go all the way to the top of the daily range and provide the sells only there with the next divergence to develop. This or other way around, as long as the daily cycle holds and maintains, the structure is bearish and the expectations are accordingly. Natural gas, we cashed out the first part in between 2.6 to 7. We've been talking about this area. Buy retraces could be, should be still the correct thing to do. This is building up the first structure by itself. I assume that these levels would use us as a clearance zone. We should get deeper correction here and a rally further. So basically something like that. Triple, double. The plan for the long term never changed. For all those of you who are involved in the buys, start to pay attention to the building up false breakouts and the divergence and the fact that this is all the first daily leg. Two waves or one shot with bullish hidden divergence or any long-term range here are likely to come. So it's a great time for all those of you who are involved to cash out good part of the trade. And for all those who are not involved, let the dip correction happen. As per stocks, we have few. One invest in Deutsche Bank, one shorter term Adidas, where we expect the two waves correction with the bearish hidden divergence inside this cycle. The 4-hour chart is the one that creates the structure of lower highs, lower lows, and the two waves. Breaking below the trend line should provide us the opportunity for the next movement down. Once again, we expect this. Break below this structuring trend line should open the doors for the sells. And the one for the longer term is buyer, where we are trading the weekly triple cycle. We have this, the big one, of course, the small one, the special cycle, sorry. So, but this is for the long term, so unchanged. Cryptos, there was one short-term trade from previous week. Where is that? Here. Dash USD, where we wanted to see move down and a shot. Sorry. This was a cycle by itself on the 1-hour chart. Not cycle, but structure of a trend. Higher highs, higher lows. Then we got the two waves. And as we discussed, break above it. And we are bullish. You can see yourself how great it turned to be. Wonderful risk reward, so I hope you managed to enjoy that. Simply amazing. Right now, game over. Two waves completed. And the target of this last daily cycle was reached. Now we're waiting to see what's coming next. Ripple and Ethereum are the one that we're holding for the longer view, unchanged for the buys, and Ripple is the only one among them all that is still not moving, simply stuck, but unchanged. Oil, well, oil is, you really want to trade that? Because, well, I'll make it simple. For me, oil is buys for one reason, nothing technical, only fundamental. The craziness happened during the weekend with drones attacking the oil pipes, puts the fundamental pressure. I believe other countries would release some of the emergency storage to balance the prices, but for me, it's buy dips. I do think we're going higher. I've been reading a lot of articles during the weekend talking about the 100 back again. I don't think 100 is currently in any of the horizon, but definitely the bullish pressure is here and on. So I don't see a cycle, so I'm not going to make any technical setup here. I see nothing, but definitely the pressure is still bullish fundamentally. Technically, I see nothing. I don't trade the fundamentals in my live trading, as you know, so that's pretty much it. So guys, that's all. Don't forget the FOMC cash rates this week. A very important fundamental week. So thank you very much for being here. I'm going to work on the report for you. Once ready and completed, it will be published. I wish you a wonderful trading week. Thank you for being here. Keep in mind, Jordan would not be able to hold his live meetings tomorrow and Thursday. So instead, he would upload full video with the trading report once he is back. He doesn't know the exact hours he will be free. Okay, and I'll see you again on Wednesday. and of course in the Telegram groups. Thank you. All the best.